Welcome back. Time now for the word on Wall Street. Top investors watching your money. Joining me now is Payne Capital Management President Ryan Payne. Also with us is Kenny Polcari this morning. Ryan, thank you so much for joining the conversation.
Great to be here.
Good to see you. We got futures this morning mixed with the Dow down, but the Nasdaq up again. The Nasdaq will not quit. We had record highs on the S&P and the Nasdaq earlier in the week. Of course, the markets pulled back from those record highs yesterday because the chip makers are finally cooling down. Micron Technology and AMD were down after enormous moves in the last couple of months. The April CPI, of course, hotter than expected. We were expecting that with oil prices where they are right now. But you've got to call this a victory. I mean, I think so. Look at where these markets are since the end of March, Ryan. What do you think is going on with the Dow Industrials up 10%, the S&P up 16 2/3%, and the Nasdaq up 25% just in April and May?
Yeah, I mean, you almost have like the perfect financial stimulative cocktail. And I'm not thinking about drinking, Kenny. But, you know, if you look at the fact that we have tax cuts, right? We have one of the biggest tax refunds ever in history. You have deregulation. We know about the AI cap spending going on right now. You have this accelerated depreciation for capital expenditure right now. We have profit margins just widening. Like, the list goes on and on. So I think if you look at the stimulative nature of what's going on right now, the AI boom that you have going on and the industrial revolution going on right now, was just the huge demand for anything infrastructure related. It probably doesn't get much better than this, especially as an investor right now. Like, this is one of the biggest, broadest bull markets I've ever seen in my career over 25 years. I mean, you name it, small caps. You look at, commodities right now at all-time record high. If you look at real estate investment trusts up 10% this year. I mean, the list goes on and on. It's just an incredible
rally, yeah.
It's the everything rally, yeah. Exactly.
And I mean, investors have been looking through the Iran conflict as we await some kind of a partnership between the U.S. and Iran. The president said yesterday that the ceasefire is on life support. The Pentagon also said that Operation Epic Fury is costing roughly $29 billion at this point, Kenny. That's $4 billion more than it was just 2 weeks ago. Do you look through this stuff the way that most investors are as well, or does it concern you where we are that this is not over yet?
No, I think the market is pretty accurate when it looks forward here. But I would say this, like, you've gone parabolic, you mentioned this earlier in the show, like semiconductors are up 70% this year.
Right.
That's a wild move. And look, this CapEx can go on for a while, but I'm going to tell you, these analysts, they won't tell you when the CapEx spending is going to stop. No one's going to warn you ahead of time. That's what I've learned in this business. That's why I think your advantage right now is to broaden out your exposure. Lots of places to invest that are a lot cheaper. Don't wait for the party to end, because when it ends, we're going to be talking about it retrospectively. Like, oh, how did we miss that?
I mean, this is, by the way, this is what President Trump put in place before this war. You talked about it, deregulation, tax cuts, tapping into our energy capacity. That's why the White House says that the growth story is intact. I spoke with Kevin Hassett on Sunday. Listen to what he said. Got to get your reaction, watch.
Yes.
What kind of economic growth number would you expect for 26 and beyond then? Let's assume that we do get out of this war fairly soon. What kind of GDP growth number would you expect for the U.S. economy?
If you look at how fast the capital stock is growing, that's sort of like how much stuff that we make stuff with. It's between 5 and 8% right now. If you divide that by 3, that's about how much GDP growth you get out of just capital spending. We've got productivity growth at 2.5. I think we really could be looking at numbers north of 4, north of 5, north of even 6, because there's so much capital stock growth right now. Remember that the 2% number that you saw for GDP growth, the reason why it was 2% and not 4 or 5% was that we imported a record number of capital goods because we're building all these factories. Once we turn those factories on, you're going to see really growth unlike anything we've seen before.
I don't know what to say about that. 4, 5, 6% growth in 2026.
Yeah, I think it's a little bit aggressive. I think it's a little bit aggressive. I think if we're 3 and 4, that's probably fair. But I don't think 5 and 6. That feels a little bit frothy to me.
Do you agree with that?
Yeah. Look, I mean, 3 to 4% growth would just be phenomenal, and that's close to historical averages. Remember, we had 2% after the Great Financial Crisis, which was very low. Yeah. So that's more realistic. I agree. I have really rosy-colored sunglasses on, but not that rosy.
Well, I'll tell you, you were on the floor of the New York Stock Exchange for so many years, Kenny, and this is the kind of market that you want to go public.
Right.
We've got some blockbusters coming. You've got SpaceX and Anthropic announcing a new partnership expanding Anthropic's AI computing capacity this morning. That's through access to Colossus One. That's one of the fastest and largest AI supercomputers in the world. SpaceX's data center in Memphis, Tennessee, featuring over 220,000 NVIDIA graphics processing units. Anthropic is also reportedly in talks to raise another $30 billion in in a new funding round as the maker of Claude Model I's a valuation of more than $900 billion. SpaceX expected to go public with a valuation of more than $2 trillion. That's going to be that's going to be the biggest IPO we've ever seen.
Yeah, and listen, to your point, yes, I think it's an exciting time to go public. I think both these names and anything in this space is just going to there's going to be so much excitement around it. There's so much money waiting to go into it, and people are chomping at the bit to get in. They want the opportunity. So I believe in it. I think everything Ryan said is correct in terms of the economy, what the eco data is saying, and the big beautiful bill and the tax. I think all that is true. But that doesn't mean that you can't expect the market to kind of, churn a little bit, right? Move and come back and move and come back and sell off a little bit and then advance, because I'm very bullish at the end of the year that we're going to be in a better place.
Do you think we're going to get these deals this year? These IPOs?
Yeah. Absolutely. I mean, the capital markets are opening up here, and there's just so much cash on the sidelines to keep fueling this that maybe you get a pullback here, Ken, but I wouldn't bet on it.
Yeah, not a huge pullback. But I think the market's aching for this stuff.
Yeah, for sure. Great to have you this morning.
Thanks, Maria.
Always a pleasure. Thank you, Ryan. Kenny, you're with us all morning, and we're so grateful for that.